G'day all, been here East West. I'm going to take a look at silver in this video. We'll have a look at the ramifications of the payrolls number that's just come out, what the US dollar is doing, what silver's doing, and we might even have a look at some silver miners. So I just want to quickly touch on the US dollar. For those of you that just watched the gold video, you might want to skip ahead to the actual silver video. It should be able to skip ahead there in the chapters, but if you haven't, I think we do want to talk about the US dollar in the same regards that we talked about it with gold and what the US dollar is doing. So, I pointed this out. Obviously, we had that payrolls number that's a little bit weaker than the market was looking for, and as a result, the rate cut rhetoric will start to fire back up, and I would expect that that's going to be ongoing until you get a set of data that would suggest something going back the other way. But until then, the US dollar is going to remain under a bit of pressure. And of course, I didn't mention this in the gold video, but of course it is also worth, and yes, if anyone wants to point it out, yes, of course, the operations of the Ministry of Finance in Japan to support the yen against the US dollar has also had an effect. Now, this of course is the dollar index, which is against Europe, and basically against the euro and the yen is the main components, of course. But you would just think that with rate cut rhetoric starting to fire up again in the States, that the US dollar is going to remain under pressure, and that should be good for anything that's priced against the US dollar, right? Well, that's what I would have thought. But before we do that, we'll just quickly go through the process here. So what we've got going on here, it's just the way I look at it in terms of the swings, is that we had, we had this upswing here that went for, so this upswing went for 33 days and traveled 4.33% up. The next upswing only went for 26 days and traveled only 4.06%. So what I would read of that is that this upswing lacked the power of this upswing, so that the move up was not as strong in terms of distance and time. Now, going back the other way, of course, I mean, just look at this downswing, which went for 17 trading days, only traveled 2.5%. So this downswing is still ongoing, but for this downswing to outpower this downswing, which would, for me, put the sellers firmly in control, I would like to see this swing continue past, well, this would be next Friday. So, continue on through next week, which I think is a pretty good chance. And then I'd want to see it come down further than this swing was about 2.5%. So I'd like to see this drop to exceed 2.5% on this swing. Okay, now if we get that, and you can just see, I pointed this out as well, you can just see that, a move down there is going to challenge the sellers, because laying down there, we've got the confluence of the 61.8% retracement of this swing coming with the structural sort of highs, the old resistance that became support here, sort of down here around just below 104. So that'd be something to keep an eye on. I wouldn't disregard this, because I think it could be a case of, if you see this continuing to weaken, but gold, silver is not responding, well, I'd keep a beady eye out for the rubber band effect where it starts to ricochet higher. So just coming into here, and this is the problem, right? Even though you sort of look at the US dollar in that regard, okay, well, maybe you've got a case there for precious metals to start to pick up a bit of a bid. They're not particularly doing it, not yet anyway. So you've got to do, I said the same thing in the gold video, right? There's what you think the market should do and what the market does, and they're often not the same thing. So even though we think the market should respond, if it's not, it's not. Okay, so the thing about this is, this is quite, as opposed to gold, which is a little bit sloppier, this is quite a nice, I mean, look, that's a downtrend. The market's trending down. That is just all you need to know. Okay, we've had that, okay, and it's just making lower highs and lower lows. And while that continues to go on, I'm not a buyer of this market, even though I think there's reasons building that it should be looking to go back up. So I think what you got to do here is you just got to keep an eye out and just observe the way the market's playing in terms of measured moves. So, down, retracement, down. Okay, so there's the first one. Let's drag off maybe that point. Maybe you want to take it off that one, but either way, we've gotten down there again. Okay, probably off the. I like to use you can use these sort of peaks, but where the market really started to have the high before it really had its move, which is down here, and it's just come back down here, and we've come down here. The fact that this is happening down here probably means that there's measured move covering. Okay, so trading programs, algorithms have probably been trying to sell this level, and they're happy to cover there, and that's the measured move. Okay, so it's still playing to that tune. Until it stops doing that, I think you're going against the natural flow of the market. So what's the next thing we look for? Well, very simply, if this proves to be the low, okay, and they might have already started playing the game here. Okay, they might have already started playing the game here, because we got to here, we got that measured move, and then what have we got? Down 50% back. So that remains the point. Okay, it just lines up with the wicks, but that remains the point that we have to beat. And until we can get above that, okay, and probably even do something like that, I don't think you want to be going in and buying this market. Okay, even though we've got all the approaching areas that we talked about last week, the next measured move target sits right into this zone that we were talking about last week. Okay, but I'm not a buyer of this market. You either sell it, which I think is getting more and more dangerous, or you buy it. Okay, or you stay out of it. Don't buy it. So even just quickly looking at these swing relationships, even though let's just move out of the way. Even though the indicator's printing this, that's just because this hasn't confirmed as a second degree pivot. It will, because one of these lows is going to end up being a first degree pivot in the next couple of bars. So what will happen is this will repaint, and this will end up being the low. So what I wanted to just point out is that if that is in fact where we're going to stop, okay, so we would have a move down here now that it did go longer than this one. Like this one was 14 trading days. This one's going to be it's 14 bars, whereas this one's going to end up being 25 bars. But this was quite a sharp fall, right? This was 7.93%, and this one's only fallen 6.24%. So it's not a hard and fast rule. It's just more like an indicating rule of thumb, that if this, even though this has gone longer, if that's just a little bit shorter in length than this one, then you just look at this and say, okay, well, it feels like maybe the power is starting to run out of the downtrend. It's just an early warning sign. We just look at the size, the duration. Even though the duration's longer, we just look at this one. This is 2 bars. It fills 7.5%, and this one's, this one might prove to be the longest run of the correction. Okay, but we've had 3 now. 1, 2, and then of course we've had this one that's just 3. So is that going to finish it off? Well, I don't know, but you can see now, and for those reasons that we looked at, right, in terms of being a measured move area, we're now just starting to get a little bit of gumption just down here on the short term. So look, it's almost like a range, right? So that's just kind of on the very short term. We're on an hourly here. Maybe we should go down. Sorry, we're on a 4-hour. So even just down here on an hourly, a little bit careful here, but of course you could sort of say, 28, 4.41%. We've got this upswing. This one's the downswing. Maybe that's just a little less power. It's just starting to struggle a little bit on this down move. But I think just put that aside. You can see now we're just trapped in this range. So we just want to look for the breakout, okay? And then we can just see, we know the obvious points. We've got a little bit of something up here, but it's going to be all about getting through there. Actually, sorry, I've drawn that off the wrong pivot. I wanted to draw it off that. And then that would be just where we're looking for, okay? But the fact, like I said, the fact that we've made this measured move means that you've got to now be looking at sort of here, and, lo and behold, that's the area that we've got to get through, okay? So and then you can old support, does that become new resistance? All the age-old questions that you see over and over again. So that's just where we sit. We just need to break up from there. So I'm kind of expecting it will, but until it does, I'm not buying it. So I thought I'd just also, before I wrap up, is quickly have a look at this Global X Silver Miners ETF. So, what's going on here? We've got some, we've got some pretty good stuff going on here. In so much as that we've, out of this, we've now terminated into what you could basically consider a trading range. And in fact, you could probably even tighten that up to to sort of say this is our trading range now. So we're, as we sit on the weekly, we're now challenging the top of that range. So, down, up, we just sort of held, and now we're here. So that, and that would sort of sit. And now I've come off this pivot as my retracement zone. So why would I have come off that? Quite simply, I just think this was a messy range, and this is kind of the high that we broke down from, sort of here. So when I look at that looks like the first one. So if I come off this, now it's a little bit tricky here because this one broke. Okay, so I'll look at that, and this one kind of broke. Should I now come off this? Well, potentially, yeah. And if we do that just sort of, we've just poked through that 61.8, or you could come off this one still. And we're sort of in it. So it's probably fair to come off this one, actually. And you can just see that we're just resting on that 61.8% retracement. So once again, the point here is that, once again, as with gold, this looks much more bullish to me, just in my eyes, than what we're seeing in the actual silver market itself. So I just think this bears watching. And even the fact we're into this range, and now what's happening within the big trading range is we come back here into a daily, and now what we're doing is we're putting in a smaller trading range within the range. So this looks like even more, this looks like we've built a bull flag, and we go again. And if this is going to happen, then is that going to coincide with a move up in the silver price? So that's kind of, it's the same thinking in the silver as in the gold, which is not obviously a surprise, but I think that's probably, maybe that's just a bit too tight for that one, but that's just where we sit. I think it's just, this looks like a building pattern. Remains to be seen, but this looks like a building pattern that looks more likely to go higher. And if that's the case, then I'd be watching this in terms of laying my plans for silver. So once again, just to finish up, I think you've just got to watch these lows, particularly paying attention here. So what are we talking about here? We're talking about anywhere sort of down here. Let's just tighten this up a bit. Any sort of where down here, 25 sort of 40 to 25.80 is certainly a big zone of interest as we just get below the 50% mark into this measured sort of move area. But if it fails to get down there, that this is your first point of call, right? So 26, call it 26.90 to 27.05 on the top side, sort of that 15-cent range. If we can get through this, right? If we can get through this, the next point of call, which is, you will have sort of resistance here, 27.40-ish, up to sort of 27, or even up to here, 27.90. But certainly if we started breaking through that, then, I would be thinking about going up there. So I just watch for the telltale signs, because like I said, still a downtrend. It's still not a buy yet, okay? But I think now you can sort of be on the lookout for signs that it's going to make some sort of bottom. So that's it for this week. Let's just watch it all and see what happens. Thanks for watching. Don't forget to hit like and subscribe. See you next week. Bye for now.